Welcome to our quarterly webcast, a short interview offering a close-up experience with one of our NNIP investment professionals. Iwan, welcome.
Hi, Caroline.
The first quarter of 2015 had quite some moving parts. Can you tell us something about that?
Yeah, a lot happened again in the first quarter. So amongst other things, currencies and central banks playing a leading role. So what we've seen that global equities, global real estate posted positive performances again, especially when measured in euros. Because obviously the appreciation of the US dollar versus the euro of around 11%. We did see government bond yields coming down much further in Europe, especially looking at the German Bund setting new record lows. Now, a couple of reasons for the Eurozone government bond yield trend: low inflation, very modest economic growth, and of course the ECB bond purchase program.
Quite some developments there. Does that imply that you carried out some changes within your portfolio, or did you carry on the same path as last quarter?
No, we did some, but on average, I can say that we kept basically our risk-on stance, meaning we were predominantly allocated to global equities and also to global real estate in the risky asset part of the portfolio. We did make a few changes. Next to that, we sold our global high yield position in the beginning of the quarter. We scaled down the interest rate sensitivity of the fund as well, and we sold some of the government bond positions that we had.
And did these changes pay off in the end?
We had a very good quarter, so the performance was well above target. All returns every month were basically positive, so adding to the total return for the full quarter. And another interesting thing to mention, and a good thing to mention, is the fact that we breached the 600 million AUM mark based on inflows and good performance.
So let's then look ahead and ask you about the positioning.
Yeah, we are still positive, so we still have a risk-on stance. So on the asset class positioning, we still have an overweight or tilt towards global equities, and more specifically to Eurozone equities and Japanese equities, and to global real estate. Now, looking at real estate, fundamentals are still supporting for that asset class. It's also an asset class that will basically profit a lot from the search for yield theme, we think. On the equity side, earnings momentum, earnings growth, valuations are still supporting that asset class as well. So we keep a risk-on stance for those asset classes.
Good update. Thank you, Iwan.
Thank you.
And if you would like to find out more about this strategy or any other strategy, do visit us at nnip.com.